following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Got a little information that's hitting the markets. Obviously, Greece and some China numbers that are squeezing margins, I guess. The Greek crowd is saying we're coming to the cliff here, obviously on the debt situation, and saying the matter is very pressing. So let's take a look at our S&Ps. This is our weekly. Let's just see how these things are reacting here. That's our weekly. That 72 area we talked about was the target initially on the downturn from that 2100. We were talking about that. If you weren't listening to the show or here on the radio, we were using our Brett situation here to kind of gauge that and starting to see some cracks in the armor. We've already talked about that a lot. But, you know, what do you do now? In fact, yesterday we talked about, you know, as we, opened yesterday, we talked about we would hope that we would migrate back up into that 84 area to try to get some more shorts off. And we actually went all the way up into 2083, rounded off 2082.50. So got very close to those that level, if you will. But what we want to do here is, it's actually a good primer to kind of, be patient. Not, I sit in front of the screen. I'm the worst victim, or, the guy who's I proved it out yesterday. I was banging around with some Nadex binaries, and it's very difficult to sit in front of the screen and not hit the button. I'm aware of that. Definitely aware of that. But a lot of times, it's really, really good to walk away, write down a little bit of a plan, walk away, and then come back and just make sure you stick with that plan. And the plan we had talked about was just to wait until the market comes to you. And that wait until the market comes to you is around that 84 neighborhood. So again, we talk about this a lot too, that, this is not to the tick. It's just a general neighborhood. A lot of times it will happen to the tick, but a lot of times when you get close in that area and you're playing a little bit longer term time frame game, if guys who are day trading and got 50 lots on the DAX, they cannot afford to let things go against them or not be very pinpoint accurate on where they're entering and getting stopped out. But when you're playing a kind of a shift in the marketplace type thing, you want to give yourself a little bit of room, a little bit of noise factor. And yesterday was a pretty good example of that. It was example on two levels: waiting patiently if the market can come to you, and then also that kind of general neighborhood situation that I just spoke of. Obviously, those news events aren't something that you can count on, but it was really interesting how this worked. And that's that high probability setup, close below, go back and retest. And we talked about, after the 72 had been met, that was the dream scenario if we could just go back and retest 84. So now, this is not a complete technical breakdown on the long term. And in fact, looking at our breadth this weekly, as we kind of let the markets open this morning, one of the indicators we had talked about previously was we had this new box above getting into the 13% range, and that's on the weekly. What does that mean? That means that, we had 13% of the S&P 500 stocks start to show at the same time we were starting to show some cracks in the armor on the rest of our summary compilations here on the individual instrument profiles being summed up. This 13%, now it's down to 6%, but this is still, really decently bearish news here. And as we open today, obviously we're opening down, and we're opening down what, 59, 60, about whatever, 16, 17, 18 S&Ps. We're probably going to start seeing some weeklies start gravitating down below profiles, and that's actually going to give us some pretty serious changes in the marketplace. And we haven't had the weekly crossover, and let's just go back into this. We haven't had a weekly breadth turn negative basically since, I'm going to blow this up here. Well, we got very, very close on January 23rd, but we haven't had a weekly breadth cross negative, or actually be negative, since October 17th. So this is a pretty, what is it, March, what is today, March 10th? Yeah, is that 6 months ago? Yeah, approximately. So this is a pretty big deal, to put it mildly. So as we look at this, we're going to keep our eye on this. And now the big leverage point is going to be this 71.72 area. So again, what do you do now? Yeah, I hear you, Jay. What do you do now? Now that we've had the move, and now that we've had the kind of retracement back up into this, we're kind of, on a long-term basis, let's just step back and look at it. We're getting into the balanced area on the long term. 72 is going to be the lid on that. Any retracements back up into 72, in my opinion, are going to have to be sold now. If we get a weekly close down here, that's going to be pretty damning for a little while for the longs, and especially if we get that breadth crossover in the long term. And as somebody was pointing out yesterday, somebody called me. It was a guy down in Sarasota. I used to live there. Very nice man. Talked for a little bit, and we have back tested this back into 2003, and I'm actually getting him some data so he can look at it. But these weekly breadth crossovers are very, very powerful. They're actually long-term kind of shifts, and as Basil called it, the tide of the marketplace, which I love. And those long-term crossovers, just as if you're trading a moving average type crossover on a long-term 50-day, 20-day, stuff like that, you're going to have give yourself a little bit of room to be wrong. But those things are generally, when I say that, obviously if you're trading on longer term indicators, those aren't to the tick, and you're going to have to, buffer some. Even when you're right, you're still going to have some noise that's a little bit larger than trading on a shorter term time frame. I don't know if I'm stating that correctly, but I think you get it. So those weeklies are pretty powerful. Here's the 240 situation, and it's kind of interesting now too that the 2069, 2072, that's kind of nice that two different time frames are lining up there. But right now, do you short this in the hole? No, because there's nothing to hang on to here. You could do it, but you need to put some trailing stops in, and I don't even know what you base those trailing stops on. We're actually cratering right now as we speak. This is real-time futures. But if you're not in this trade short, I don't know if you just step in and start buying this, even though we are starting to have the technical damage that a lot of folks were hoping for trading opportunities. For investors, let's just take a look at it from that angle. For long-term investors, well, let's just look at intermediate investors in the stock market. The technical damage and the retrace and the failed ability for this to get back above 2084 is very technically damaging in the short run. Now, is this long-term technical damage? Could we bounce around in this just like we have before? We ran up to this thing before on February 2nd, backed off, and then closed above, and then that was providing some long trading opportunities. But as we saw the breadth starting to crack here last week, that was when we said, you know what, that trade's probably over from the 2072 area into 21, etc. Now you've got to just sit tight on the long side, on the investor side, in my opinion, just kind of wait this out. It's not a bad time to buy hedges or to buy insurance or to buy puts right now, in my opinion, even though they're probably getting pumped up. Yeah, I hear you, Jay. Jason in the den, he said the dipsters, the dippers are getting nothing for their efforts from yesterday, and that's true. But that's what stops are for. if we've been, I've not been averse to buying the dip myself, especially after we started having some breakout opportunities lately, especially about 2052. But you almost got to keep playing that game until you're told to do something differently. And what we did is just another little bit of a primer here. We kind of shifted gears to get on the short side and then start to short inflection points instead of buying the dipper inflection point type mentality. And that's worked out nice this time, but it doesn't have to work out. I mean, you're just playing the odds, playing the probabilities with what you have in front of you, and also kind of using some of the things that we look at on a day-to-day basis to try to get a little bit of an edge one way or the other. But the main thing, again, we talk about this all the time, is if you were to buy the dipper and trying to buy the 2084s as it was going down, instead of opting out based on the breadth we were looking at, you got to put stops in, and that's okay to get stopped out. It's lose a little, make a lot, and then that's kind of the way most successful traders are running their books, especially on a trading desk. And those guys are under a lot of stress, and they can't have one particular trade take them out in a body bag. And it's not about your winning percentage, really. It's about your risk reward scenario. Let's take a look at the dollar, and let's look at this. That this is ultimately not going to be that good for the U.S. economy. I don't have to tell you guys that. It's a direct reflection of right now the kind of fears, and the euro being the gift that keeps on giving. We talked about that. We talked about ignoring this divergence down below in our navigator because there's so much overhanging fundamental reasons to not pile into the euro right now. It's just an unstable feeling situation. So we caught some good shorts off the 114.47, but what do you do now? Again, we've been talking about this thing is not on sale, guys. It is not on sale. This thing can go a lot lower. If you've been trading commodities for a while, you know exactly what I'm talking about. So we got about 20 seconds for the first break. Yeah, it's amazing. It literally is amazing. So here's the yen. We really talked about it was kind of okay to get back in the water on the long side when we got above 119.45, and then we've kind of caught support areas. We talked about not selling resistance on this and buying support, buying breakouts. And we'll talk about maybe what to do with this as we come back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're looking at the yen. We're just going to follow up on this, and that just want you guys to look at this here. When we had the close last week above this 120.42, we've been kind of pounding the table about never going short the yen, and actually trying to find opportunities. That's our long-term weekly. This is our daily situation. What do you do now? We actually have eclipsed former recent highs that were made around December, around that 122 area. So we hit 122, we're backing off. So what do you do now? Here's the 240s. Here's kind of the regulator of the trade. When we had an orange bar, you guys actually have access to this. And let me show you. Let me go into currencies. Okay, pulling this up. Okay, so I'm sorry. I apologize for. Here we go. All right, so the USD JPY. So you see that gray box right there? Even if you don't have our indicators, this is kind of neat how this works out. Is you would have seen a yellow cell, all right? And what does that mean? A yellow cell, there's a little legend here that I can pop up. Yellow, new box attempting to appear. So when you start seeing these yellows flash, that's actually a bear sign in itself. It means a box or a profile has not locked in, but it's a sign that there's overhanging supply coming in. And that's actually what was going on when we saw this orange bar on the previous, and the show obviously wasn't, we weren't doing the show last 4 hours. But so as this was orange, and as you may or may not have had access to the scanner, this would have been a reason that there would possibly be a new profile appearing, and therefore new supply, and therefore it might be not a bad time to just on that level, on the 240 minute, the guidance level on that long-term trade up, to start looking at possibly taking some profits. Now, if you don't have the scanner and now you're sitting here right now going, oh God, we just pulled back 80 ticks from the highs here, what do? You always should have some form of, not giving back what you've made in place type mechanism. And if you're looking to buy this, 120.77 is the next kind of gathering itself point, in my opinion, for the yen. One of the things that, just on that note, it kind of makes me remember, we're kind of having this, to some degree, open up, go up high, and then reverse and close down below the opening, possibly on the yen here on the daily. But keep that level in mind on the 240s, 120.76. But as I was, just kind of remembering something, one of the things that on our proprietary trader desk that we always talk about is, don't let a winning day turn into a losing day. And you always, even there's a lot of things I could say about that, but and when do you declare it's a winning day? Is it when you're up a penny? I mean, so you need to kind of, in my opinion, have some kind of game plan, and not let a kind of a winning trade that clears a certain hurdle on the profit side not turn into really a losing trade. And that doesn't mean be so stingy that you don't let the trade breathe, but there's some form of a plan you need to have in place in case you've met some targets, and based on your time frames and the noise factor that you're going to give a trade to breathe, just have those in place. Almost write them down. It's always a good idea to just kind of have a guidance system to go by when you're in profitable trades or in losing trades. So that's my 2 cents on that. Let's go back into the S&Ps really quick because we're having some more downside movement here. I don't see anything down here. There's no reason to buy this at this stage. I think you've got some good leverage points that will continue to appear on the 240s. Here's what this is. All right. Let's take a look at the DAX, and we're going to take a look at the NASDAQ in just a second here. But the DAX, and I'm going to just kind of declare that we've got this orange bar that started appearing on the DAX for the first time in a long time, and now you've got the euro not forcing this thing up, but here's the 240 minute, and we actually broke down, if you're using this, and again, these are seen on the scanner, breaking down below 11,492. That was a very big situation on the technical damage side, so maybe time to sit tight on the DAX for just a bit. We'll be right back to talk about this a little further.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Showing gold right now, but you know what's weird? I was looking at the comment actually on the Den about somebody had called someone about the S&P's gapping down 20, and what does that do to your long-term investment mutual fund account, whatever. You know, it's wild that these reinvestment plans actually sometimes get people in trouble. And as this market pulls back, you know, people have gotten heavier and heavier as the market has risen. They've, you know, these stock continually buying shares type programs, you know, if they've had 100 shares and the market pulls back, you know, 10%, you know, what does that do relative to if they've got 500 shares and the market pulls back 10%? I mean, those are things that everybody's got to think about when they talk about, you know, doubling up and doubling down and all that kind of jazz. So here's gold. Talked about staying away from this, you know, about from the long side. And we've talked about that since we especially didn't get back above 1222. This is the April contract. And, you know, what do you do now? Here's the 240s. You know, I still would really like to see, going back to our daily here, I'd really like to see a new profile appear, especially on our dailies, just to kind of, you know, have some stronger levels to focus on here. Right now, you know, we've obviously been trending down. There's not a lot to hang on to on the weekly or daily, and these 240s just could be a regulation situation to guide this thing actually lower. But, you know, I'm not a big fan of shorting gold or going long gold right now. I think it's just kind of let's wait for gold to kind of give us a confirming situation, either a new profile or just get into some type of level that we can feel comfortable with trading around. Let's take a look at silver. Again, we talked about picking a battle at 1587. Here's the weekly on silver. And obviously that's been breached. So based on your appetite for risk, that could have been considered a little bit of noise here. It's acting extremely well relative to gold. So again, getting back above 1587 is going to make me feel a little bit more hunky-dory about that, and targets above 1623, 22, 23 right now in silver. Yeah, I mean, for short-term trading, gold is obviously providing some great volatile situations to do some day trading off of at the very least. But silver, I think, you've got to take a look at that as somewhat of a longer term play, because it's setting up that where if we can get any kind of cooperation from gold and silver getting back above 1587, that's going to be kind of a nice situation to possibly get back in the water on silver. Let's take a look at the June contract of the 10-year. So we're getting, we had a new profile up here 2 days ago on the 10-year, and this is where we're at here. We're kind of coming back up into some leverage here around 126.28. We're sitting there about right now. So what do you do with the 10-year? The 10-year's kind of broken down recently on the long term. Let me just show you that. And still think we're kind of in no man's land with this. We're going to have to get back above 127.11 to just start feeling a little bit better about being long this. And right now, I'm still not a fan of going short treasuries. Still not a fan of going short treasuries. So I'm just kind of waiting patiently for this to show some green shoots to get back in the water on the long side. Here's the 30-year. Why is that looking like that? Okay. Same situation, in my opinion. I'd like to see this get back above 159.10. And again, I'm not a big fan of shorting the 10-year or the 30-year. Let's take a look at the Shanghai, because this has obviously been rattling around because of the news in China. Here's the daily situation. We've been talking about trying to trade this from the long side. 32.29 was that leverage point yesterday. We obviously breached it and then got back above. I'm not a big fan of shorting this instrument. So that's the levels on the Shanghai. Let's go to the NASDAQ really quick. Just give you some broad market barometer information here. Talked about trading this down into 4,400 when we were sitting up top around 4470, 4480 up in there. We met those targets, 4,400, and now we've come down into the balanced area, 4364. Remember, the S&Ps have kind of had the technical damage. This is still hanging in there. 4364, is that a buy point? Well, let's just kind of circle the wagons a little bit about this, and let's just go back into our scanner for a second. Let's look at the NASDAQ breadth here. The S&Ps were obviously on a relative strength trading mechanism where they were showing their hand on the short side while the NASDAQ was hanging in there. And this has still been the stronger of the two instruments by all means. But, the breadth is still, would like to see that a little bit more negative. And as we look at this, is 4364 a buy point? I think in the short run that could possibly be the case. So again, I'm not messing with the NASDAQ because the S&Ps are a little bit easier to read right now. But that would be a target-rich environment on the short side and a possible bounce point on the NASDAQ based on the profiles. Let's take a look at November beans. I was relatively bearish on this, and I'm just going to go back to it. We have come up into that 975 a bushel area and kind of backed off. That's actually, in my book, that's kind of good. I've been relatively bearish on beans. I know some guys out there trying to pick bottoms on this, but I think we're going to possibly trail off farther on beans, but that's where I'd orient stops above 975 on November beans, the new crop. Okay. We're going to take a look at the XLF really quick. Still like this from the short side. Targets down below 24 and even farther down on the XLF. Let's take a look at Apple in the midst of all the getting into the Dow situation. We talked about leverage points 129.63. That was actually hit again yesterday. Let me see where we're at pre-market here. 126.40. So we're getting back down below profiles on our daily again, and that 129.63. I'm not a big fan of shorting this instrument, but again, it's kind of proven that your target rich environment alongside top of the profiles, and also taking into consideration where our market profile breadth is, unless that's the NASDAQ. This is something that's kind of eliminating the long side for me right now on any instrument, because the leverage for the broad market is towards the short side. What did I do here? Don't know what I just did. How did my chart do that? All right, let me fix this. So on that note, talking about, you know, how do you trade relative strength trading on the automated systems that we look at, when those systems are trading on individual instruments like the IBMs, the Johnson & Johnsons, the Amazons of the world, those systems will use our breadth situation to actually filter out going long or going short at certain times. So a lot of the stocks, obviously, in the S&P 500 and the S&P 100, more so have a lot of market relevance. So doing relative strength trading and trying to, trade inflection points on the individual instrument like Apple, while keeping in mind that the breadth is a certain way, either negative or positive on the time frame that that strategy is based upon, is a really, really good, as far as backtesting goes, is a really, really, really good way to look at trading individual instruments while coupling breadth involved with that trading strategy. And that's actually worked out very well with Apple. We're going to take a look at IBM. I hate this stock. Still bearish on IBM. And the new levels to leverage off of around 160. Still standing behind that. We're going to take a look at Amazon. All right, so we had a new profile appear yesterday. Right, and long-term stops for longs, even though we've changed tone here, we got a new profile, this 370 area is going to be a really big level for this to hang on to. But what do you do with this now? In my opinion, since the broad market is got these negative connotations, you stay away from trying to go long this right now. This thing pulling back is probably not in the wheelhouse, in my opinion, of the long candidates. And if you're going to go long, we've got to get a close back above 380, and you've got another buy point at 370. But I think we just need to sit still with this right now, considering what the broad market is having this change of tone. All right. Now we're going to go into the scanner again, and we're going to take a look at a couple of things. We're going to look at, let's just select none, and let's go into the S&P 500. As this loads. And we've been doing filters where we're looking at, below the box, and as this sorts, we're going to come in and just see that now we've got just a plethora of candidates that are trading below profiles on our daily. All right. And, as we were looking at this when the market was at a top and trying to find candidates to short, and some of those shorts have really worked out, now we might want to start looking at stocks that are hanging in there. Now, do I think the market's going to just bounce all of a sudden? I don't think so. That's my opinion. But as we look at this, let's just kind of reverse this sort. Let's go to things trading above the box on our daily. And as that populates, I want to just kind of look across time frames here and just quickly see what's kind of hanging in there. And as we can see, there's a lot, there was only 42. Well, let's just do the math. There was 458 stocks trading above profiles the other day before we started seeing breadth change. All right. And now that is pretty much reversed completely on the dailies. So let's take a look at a couple of things. Did I just see? Oh, I thought I saw Peregrine Financial. I was freaking out. I think Peregrine Financial was a public company and it also imploded. So let's take a look at a couple of things that are really, really hanging in there. CMA, Comerica. Let's pull that up. All right, so relatively thin. It's not the biggest high volume stock, but right now what we're looking at with this is, we had a big close on Friday, and yesterday we kind of consolidated here. Even with the market going straight up, it still looks like a consolidation individual gather itself to move higher situation. But I think you need to probably just lay off this particular long, keep it on the radar screen. I know this thing just made recent highs again, but this is something I'm just keeping these things on my radar screen for later. I'm going to take another look at, let's see, Hudson City Bank Corp, HCBK. All right, so as this was showing strength on my dailies here, and I just picked this off, literally just did a sort, just wanted to see what was new in the list. This is our weekly situation. So we're coming up into a weekly unfair high, and the dailies have cleared the other day. So right now, this is something that I just sit tight with, keep it on the radar screen. It's obviously a bank stock. That XLF may drag that down if we come down. We're going to take a look also at Kroger, KR. This is something else from the scanner. The stock has been literally amazing. I've been looking at this. It's just, oof. So this is something else to keep in mind. 73.79 unfair highs on the daily, and that's coupled with 73.60. So as we go into the scanner and we pull up Kroger, we pull that back up. Well, where's Kroger? There it is. Okay. So as we look at our landscape view, I can see that the level of the market, we're clean and clear above weekly and daily profiles. The market doesn't seem to be dragging this down with it. You want to keep this on the radar screen, because remember, stocks that are hanging in there in a market that's pulling back significantly right now could be the stocks that pop when we do get down to some kind of inflection point on the S&Ps, and that may actually be a play from a trader standpoint. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Here's crude oil. Just want to get this in. Forgot to mention it. 50 is the big area for that. And again, I still like this. I'd like to see it clear 50 again to look at it a little bit harder when we get above there from the long side. I like the way this is acting. But I want to go into a stock that we had talked about the other day, NBR. Somebody had sent me an email about this based on me being relatively more bullish on crude oil than bearish. Here we go. Here's NBR, but they said they had actually picked this up a little bit higher than this weekly unfair high around 1256. Got in a little bit higher, I guess. Again, this is something you got to kind of consider a little bit of a noise factor with these stocks. This is a $12, $13 stock. Again, anything can happen. This thing can get cut in half tomorrow or go up, $6. Some news event, whatever. You got to have stops in on situations like this. But I like the way this is acting. I love the way it had relative strength relative to to crude oil, and I still like this. But remember, you got to say uncle at some point, and you can always get back in. Saying uncle is a big part of trading. Admitting that you're wrong sometimes. It's hard to do sometimes. So here we go. Let's take a look at the scanner again. I was looking at best buys. We were looking at things that were just glaringly positive on weekly, daily 240s. But I want to kind of get back. I pulled up a weekly above profiles sort here, and what I was looking at is let's just kind of look at things that are still profile positive on the weekly, but are pulling back into some inflection points here on our kind of next level down regulator of the long-term trade. So I want to, take a look. Let's just pick up Tyson Foods here. So TSN above profiles sitting at the bottom. Let's just take a look at this. TSN. Here we go. All right. So again, this is the situation on Tyson Foods. It's a $40 stock. There's the kind of the Maginot line for this. Pre-market looks like we're trading 40.22, and we've actually come down into the bottom of our profiles on the daily. So in my opinion, if you're looking for, this obviously has come down with the market a little bit here, but remember that we've got 2 time frames lining up. We're going to have to take a look and see how this opens. It's trading 40.22 pre-market. So we're coming right back down into some leverage here. And again, this hasn't had a lot of market relevance lately. I love the way it's hanging in there. But it hasn't kind of made those new highs as the market has made new highs. So you've probably got better longs. That's the reason I'm pulling this up. You've probably got some better long opportunities, even though the scanner picked out, some dual time frame confluence here. So let's just keep going down the list. And again, I'm looking at weekly positive above the box type situations. Let's look at APH, Amphenol. Kind of like that name, APH. Amphenol. APH. Reminds me of that movie, The Deep, for some reason. Jacqueline Bisset, you guys ever... That was a heck of a movie when I was a lot younger then. I was in awe of that woman. Anyway, here we go. Top of the box here. 57.61, and we've pulled back a little bit here. Here's the weekly situation. This is something, again, pre-market, we're trading, looks like 57.35, so we're getting down below here. This is one I'm going to keep on my radar screen. We've got a new profile that appeared yesterday. Guys, you've been great. Steve Rhodes is out today, so Tom O'Brien is going to be doing his show next. Stay tuned. I'm sure you'll love it. See you tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.